Hello, all. Welcome back to the channel. Do you know that you could legally avoid paying extra taxes on your long-term investment? The secret lies in a simple trick called the tax profit harvesting. In this video, I will show you how you can save thousands of rupees with this trick for your long-term investment. If you are investing in the equity funds and keeping it over 1 year, then that is considered as long-term funds. Picture this. You have invested wisely and your portfolio is booming. But when it's time to withdraw, you have to pay 10% tax as the long-term capital gain tax. And thus your hard earned profit will be reduced. What if I told you that there is a way to reduce or even eliminate that tax? Sounds interesting, right? In this video, I'll walk you through a brilliant strategy called tax profit harvesting. The government of India has announced that from the year 2024 and onwards, there is no LTCG tax, that is long term capital gain tax, up to rupees 1.25 lakhs. But above that, you have to pay 10% tax. For example, if your total long term gain is 2.25 lakhs, then you have to pay rupees 10k as tax, 10,000 rupees as tax, because up to 1.25 lakhs there is no tax, and after that 1 lakh you have to pay 10% tax. So using the tax profit harvesting, you can redeem part of your profit, and that is up to rupees 2.5 lakhs, 1.25 lakhs now, and pay zero tax and save yourself from a hefty tax bill later. Let's break it down. Suppose your capital gains for this year are 90,000, way below the 1.25 lakh threshold. What you can do is you can redeem an additional 35,000 to utilize that tax-free limit. By doing this, you have locked in gains without paying a single rupee as tax. Now imagine, next year if you withdraw 1,60,000, 35,000 more, then you have to pay 3,500 as tax. So using this tax profit harvesting, you are saving 3,500 this year by just acting smart. So here's how you can apply the tax profit harvesting. First, check your LTCG gain. Log into your investment account and calculate your total capital gains for this financial year. If it's under 1.25 lakhs, you have room to save. Then second, redeem smartly. Redeem just enough to ensure your total gains don't exceed 1.25 lakhs. Reinvest the amount. After redeeming, put the money back into the same or similar investment to keep your portfolio intact. The process helps you utilize the tax-free limit while maintaining your long-term investment strategy. You might be wondering, won't redeeming disrupt your portfolio's compounding? Not at all. Since you are reinvesting the redeemed amount, your investment continue growing without any major interruption. Think of it as a rebalancing your portfolio. That means you are taking some profit out and reinvesting that profit so that the tax will be saved. The next question that comes to your mind will be, is this legal? Absolutely. Tax profit harvesting simply leveraging the existing tax laws in your favor. You are not avoiding taxes, you are planning smartly to minimize them. Think of it this way. Every rupee you save in taxes is a rupee that works harder for your future. Tax profit harvesting isn't just a strategy, it's a way to take control of your finances and ensure that your wealth stays in your pocket, as well as you get peace of mind that you don't have to pay more taxes to the government, as well as you have more money for your financial freedom. So what you have to do is you have to see the tax gain statement for stocks as well as for mutual funds from 1st April 2024 to 31st March 2025. If you see out here that my long-term profit and loss is zero, that means I have not redeemed any, I don't have any realized profit and loss for the stocks. But for the mutual funds, I have, as you can see, the taxable short term is 2,892, whereas taxable long term is 58,834. That means I still have room for around that 40,000, 65,000. So what I'm gonna do is, like in these 3 months, that is January, February, March, what I'm gonna do is I'll redeem up to 65,000 so that I don't have to pay any tax to the government from the next year onwards. For example, you are saving for the long term goals, right? That means for the 5 years, 7 years, or 10 years down the line. Now, after 10 years, when your goal is finished, when you will take that profit back, right? When you will redeem everything, then you have to pay 10% tax above 1.25 lakhs. What you are doing now is that if you are redeeming in small quantities, at the end of that 10 years down the line, you don't have to pay a lot of taxes. In simple terms, you are booking the profit, and you can stay invested for the equity, or what you can do is you can rebalance it to add to the debt fund, so that it will continue to rise. Your total portfolio will continue to rise. What's your biggest takeaway from this video? Are you ready to take tax profit harvesting this year? Share your thoughts in the comments below. I would love to hear them. And hey, don't keep this money saving trick to yourself. Share this video with your friends and family so that they can save the taxes too. If you found this video valuable, hit that like button and subscribe to the channel for more smart financial hacks.